The real estate industry remains as solid as a rock in the coronavirus pandemic. And it's meeting up again at Expo Real in Munich, Europe's largest real estate trade fair. After the pandemic-related gloomy mood in the second half of 2020, the industry is looking ahead once again. In our view, the mood in the real estate industry has improved significantly. Deutsche Hypo measures the industry climate every month, with over 1,200 experts. And with this real estate index, we've also noticed that things really are brightening up. We've bottomed out from the pandemic in various segments. And overall, we can see that we're now in the post-COVID phase. However, another issue that's been worrying the industry recently is the rise in inflation. We have an increase in inflation worldwide, so it's not just a peculiarity in Germany with the VAT increase or with the increase in the CO2 tax. It's the pent-up demand. It is more demand than supply. The global economy is not keeping up, and that shows that at some point we also need supply policy again. That is, the Keynesian approach of more demand to solve all the world's problems is not working anymore, because it's now leading to higher inflation. And it's going to take some time before things actually normalize again.
Bis wir tatsächlich wieder eine Normalisierung kriegen.
The crisis has affected the real estate industry differently depending on how different property types are used. Logistics properties are among the winners of the crisis. The hotel property markets, on the other hand, have had to contend with a sharp drop in the number of overnight stays. The office property markets have stabilized again, but need to adjust to changes on the demand side. I believe that office real estate will continue to be important in the future and will continue to be an essential component in real estate allocation and in asset allocation. I personally don't see the concern that many investors have that the office will lose its importance because of the home office and other tendencies to reduce office space. The office will look different in the future. Office space configurations will look different, leases will possibly be longer, but especially where we as Deka Immobilien make investments, that is in core locations and the major European cities, office investments will continue to be important in the future. I'm convinced of that. In the retail sector, it's primarily non-food retailers, department stores and shopping centres that have been impacted by the COVID crisis. The retail trade must prepare itself to make new offers. The focus should be on a shopping experience, combined with culture, enjoyment and a visit to a restaurant, and no longer just pure satisfaction of needs. I believe that if that succeeds, stationary retail, or the combination of stationary and online, has a good future, and that's important for the city centres. The residential real estate markets have proven especially robust against economic fluctuations during the crisis. I think the first important finding was that the real estate markets have come through the crisis in a stable manner. At the start of the pandemic, we'd feared that rents and prices would come under significant downward pressure, but that hasn't happened. Rents have even risen slightly, and prices have risen very significantly, far more than we'd have expected before the pandemic. For investors in particular, residential real estate has become even more interesting, but this is also leading to rising rents and purchase prices. When we hear the word investor, we actually always have the hedge fund in mind that wants to make a quick buck. But in some cases, we need something completely different. Economically, it makes perfect sense for investors to say that the risk in these situations is so low that we can do without higher returns in the medium term. This is because we're creating a structure in which we, as investors, can actually win in the long term. And that has to be promoted more strongly politically, but also in people's minds. We have this idea that private money is always bad money, and that's why it's given to state development agencies, and only public money, that's probably not enough. The private sector has to be called to account as well. Not in the sense that it should do something for the common good of its own free will. They're still private companies, but they have to make a clear risk assessment. And subsidized housing construction, organized on a medium and long-term basis, is very low risk and therefore has a lower return, but also stability. A great deal should actually be achievable via this economic model. Expo Real, an important meeting point in turbulent times. The real estate industry is looking to the future with confidence.